Okay, this chapter is about manufacturing accounts. Means that we are in the manufacturing business. Yeah, in manufacturing business, it's different from trading business. In manufacturing business, it means that the company is producing goods and then sell it to the customer. It's different from trading company. Yeah, trading company, the company is purchasing the inventory and then selling it to the customer. But for manufacturing business, we are producing the goods, yeah, and then we sell it to the customer. Okay, so since the difference of the uh, because it's different from trading company and the company is producing goods, it means that the company will have a factory, and in the factory they will consume a lot of cost. Yeah, so imagine that you are a manufacturing business versus trading company. Yeah, or trading business. In a trading business, there will be a purchasing of inventory. Yeah, meanwhile in manufacturing business we have a production cost. Okay, so we are not purchasing finished goods, but we are producing goods. So it means if we are producing goods, we need to find out how much the cost of production. Yeah, so I need you to get the picture first before I jump into how accounting will record um, transaction happens in manufacturing business. Yeah. Okay. Next. So in this chapter, you will be studied about how to distinguish between direct and indirect cost, and then direct and indirect cost. Yeah, first of all, and then you will be learn about the direct material, direct labor, prime cost, and factory overheads. And then you have to be able to understand and make adjustment for work in progress. And then you must be able to calculate factory cost of production by preparing manufacturing accounts. Yeah, over here. The manufacturing accounts plus income statements and statement of financial position. Okay, so to calculate cost of production, we will prepare manufacturing accounts. Okay, so you will have three financial statements. The first one is manufacturing accounts, the second one income statement, and the third one is statement of financial position. Yeah, and then the rest of it is the same. Yeah, make adjustment if you have depreciation. Yeah, using reducing, straight line, or revaluation. Yeah, and then adjustment for accrued and prepaid, or accrued prepaid income for expenses also. Yeah, adjustment for bad debts and provision, and drawings. Okay, all are the same, but the first financial statement that you will prepare is not income statement anymore. You have to prepare manufacturing accounts first. This is the first step. Okay, next, then income statement. Okay, and then in terms of preparing manufacturing accounts, it means you have to learn new terms. Okay, then these terms will be discussed here. Okay, first of all, we have to be able to distinguish between direct and indirect cost. What is actually direct and indirect cost? Direct cost here are the manufacturing costs that can be associated or directly attached with the goods that are produced. Yeah, with the goods that are produced by the business. In other words, if production doubles, this cost will also double. It is direct, yeah? If the production has not started, then there is no direct cost. Okay, so this direct cost really attached to the goods. Okay, if the goods exist, then this cost exists. If the goods are not produced, then this cost does not exist. Yeah, direct costs are also called variable costs. For example, raw materials, or we call it direct material. Yeah, direct labor and direct expenses. Everything started with direct. Okay, so for example, you are trying to produce a bag, yeah, a backpack. Okay, you need canvas. You need canvas. What is it? Fabric, yeah. You need fabric. You need canvas fabric, yeah, and then you need okay. Kim, did you just send me a message?
Yep, Anna asked about the depreciation.
Or it's depreciation, yeah. Okay, let me answer that after this, yeah. Okay, again, so where were we? Producing a bag, yeah. So we are producing a bag, and then we need canvas fabric, we need um glue, we need zipper, we need etc. Yeah, all related to making a bag. Okay, now the canvas the canvas fabric is called direct material because without that you cannot or you're not able to produce that. Yeah, and then direct labor is the person who actually touch that bags. So if the bag is handmade, definitely you will need a labor to do that. Yeah, so if the bag is not produced, then the labor is not exist, but if the bag is produced, then the labor is exist. So direct labor is the person who touch the bag directly or who operates the machine that producing the bag directly. Without that person, the product cannot be produced. Is that clear? Yeah. Next is direct expense. Direct expense is any other expense except for materials and labor. Any other expense that directly attached to the goods. The example of direct expense, such as patent or brand name. Yeah. Let's say you want to produce a water bottle and you want that water bottle, mm, you want the brand like for example Rubbermaid, yeah, you know Rubbermaid brand for a water bottle, yeah. So you will pay for that. Or let's say you are producing a book, yeah, you are publisher. If you a publisher, then you need to pay royalty to the author. So that royalty is not related to materials or labor, yeah. So direct expense is expense that directly attached to the goods and it is not related to material as well as labor. But this cost will appear if we produce one. If we don't produce the goods, then this cost is not exist. Yeah. Okay, clear, yeah? We will discuss that furthermore in B, yeah? For next is indirect cost. These are manufacturing costs that are not directly attached with the goods that is produced in the business. Yeah. For example, factory rent expense. Okay. talking about rent, if you're not producing goods at all, you still have to pay the rent. So whether you're producing the goods or not producing the goods, this cost still exists. Yeah, factory supervisor salary also. Yeah, so the supervisor will be paid monthly. If you have production, it doesn't affecting supervisor salary. If you produce a lot, it doesn't also affecting supervisor salary. Yeah, so if you produce or not producing, this salaries expense will still exist. Yeah, depreciation also, and any other factory indirect cost. The point is, this cost will appear no matter if you have production or not. Yeah. Next, let's talk about direct expense and indirect expense deeply. Okay. So direct material is the cost of raw materials being used. It is the cost of purchasing raw material. It is different from trading company. In trading company, we are purchasing finished goods. We are purchasing goods that is ready to be sold to the company, to the customer. But in manufacturing business, we are purchasing raw material. This raw material is not yet becoming finished goods that is able to sell to the customer. Yeah. So raw materials cost of purchase is direct material. If carriage inwards is charged, then this is a direct cost as well. If there is carriage inwards, yeah, this will considered inside the direct cost for material as well. Yeah. For example, of direct material, a baker will need flour. A carpenter will need wood. Then wood and flour are the direct materials. Okay. So far, any question? No, yeah. Next, direct labor. Direct labor is the cost of labor that can be directly traced or attached to the manufacture of items or goods. This means that the wages and salaries of people working in the factory are included. Wages and salaries of people working outside the factory, yeah, such as office, are excluded. Yeah. For example, if you are running a restaurant, the chef salary is the direct cost. Yeah. Direct cost or direct labor. Because without the chef, you cannot produce the food. Yeah. So this is an essential labor that is essential to the production. Yeah. Is that clear? Clear, yeah? Next. Is Jacelyn here? Oh, yeah. Okay. Because before she's not there. Next, direct expenses or other form of direct cost. These are expenses that are not related to raw materials and wages or labor, but they can be directly traced to the manufacture of an items of goods or goods. For example, royalties. Yeah, if you are a publisher, each book you have to pay royalty to the author. Each book. Yeah. Okay. So far, all these direct costs. Any question? No? Next. Total of these three direct costs will be called as prime cost. Okay. Again, this prime cost is the total of all direct costs that happens in the production process of a good or items. Yeah. And then we have talked about direct cost, and then how about the indirect cost? All the indirect cost will be under factory overheads. Yeah, so in the factory overheads, they all indirect costs that incurred in the factory where the production process is carried out. But they cannot, once again, they cannot directly attach to the goods or items. Yeah, example, rent expense, depreciation of factory machinery. Okay, now you have learned all of these terms. Okay, do you have any question? Still no? Okay, I assume clear, yeah? Next, work in progress. What is actually not work in progress? Work in progress are items that are not, yeah, once again, items that are not yet completed and are only partly made. These are unfinished products in the factory and cannot be sold. Yeah, for example, unpainted tables or chairs, yeah, in the furniture maker, and half done bread at the bakery. Okay, now you probably confused now what is this work in progress needed for in the factory, okay, or in the manufacturing business. Now I want to talk to you about inventory. Before you learn about manufacturing business, you only learn about one inventory in trading business, because this inventory is already becoming a finished goods or goods that is ready to be sold to the customer. But in a manufacturing business, we cannot talk about finished goods only because we are producing goods. So definitely in manufacturing business, the inventory will be divided into 3 inventories. Yeah, this will be divided into 3 inventories. The first inventory is raw material. Yeah, the inventory that is not yet been produced or still raw materials, still raw. Yeah, it cannot be sold to the customer. You need to make a process. Yeah, this goods, this inventory must run into a process first. Yeah, enter the process first or production first, before at the end it will becoming the finished goods that is ready to be sold to the customer. Okay, so we have raw materials, we have finished goods. This finished goods means that all the goods that is ready to be sold to the customer. Okay, but before it becomes finished good, sometimes the factory has part of inventory that is still half done or not yet finishing the production process. We call it as work in progress or WIP. Yeah. So these 3 inventories will always be there in the manufacturing business. Okay, so now you will learn 3 different inventories, yeah, along with the characteristic of them. Okay, next. This work in progress will be included in the factory because they are still in the factory. It is not yet finished. Yeah, raw material and work in progress happens in the manufacturing process or in the production process, means they are in the factory. Meanwhile, if it becomes the finished good, it then moves to office or warehouse because it is no longer must be placed in the factory. It has to be out. Yeah, it has to be out from the factory, move to the office or the warehouse where salespeople will then try to sell these goods. Yeah. So that is why When we are trying to calculate cost of production, raw material and work in progress will be included in our calculation. Yeah. So far, any question? No? Next, yeah. So the first financial statement will be manufacturing account. This is where we calculate cost of production. This is the template for manufacturing account. Okay, once again, manufacturing account are divided into this 1, 2, 3, 4, 5, and 6 work in progress. Yeah, all of these items are there in the manufacturing business, manufacturing account. Yeah, so this is it. The first one is to calculate the first direct material. Yeah, the first direct cost, which is direct material. Okay. How to calculate direct material or raw material is exactly almost the same with cost of sales. Okay, we will start with inventory at the beginning of raw material, and then we will add purchases of raw material. Okay, and then if there is purchase return on raw material, then we deduct it, and if there is carriage inwards, then we have to add it, and then inventory at the end, we have to deduct it. Yeah, so you're probably familiar with this. Yeah, familiar, right? Opening inventory plus purchases minus purchase return plus carriage inwards, and then minus closing inventory. Yeah, this is exactly the same like doing cost of sales. Yeah, but all information here are only for raw materials. Yeah, after that, the total of raw materials will be placed in the last column over here, the last column here. Yeah, so this is the direct material over here, the total of direct material, like so. Yeah, after direct material, continue with direct labor. Direct labor is here, over here, direct labor. Remember, this is wages or salaries of a person who actually touching the goods or essential to the production. Yeah, if this person is not coming for work, the production process will be affected. Okay, so this is that expenses, that salaries. Yeah, after you have direct labor, the next one is direct expense. If you have royalty, patent, yeah, or any other direct expenses. Yeah, it is not direct expenses is not always there. Yeah, most probably it's not there, but if there is, then you have to add it. So if in the case that you are not given with direct expenses, do not try to add any other expenses and place it as direct expenses. Yeah, remember direct expenses is optional. Yeah, can be there or not there. Yeah, but the one that is always be there is material as well as labor. Yeah, so direct cost can only have two only. It's okay. Yeah, can only have two. Yeah, next, after you have all of the direct costs listed, total them. You need to total them first. You need to be able to show how much the prime costs. Yeah, this prime cost have marks. You need to be able to calculate that prime cost. Why is it called prime? Because without them, we cannot have any goods at all. Yeah. After you have prime cost, then it's continue to factory overheads. The factory overheads, we have indirect material, we have indirect labor. What is indirect material, by the way? Okay, think about you producing handphone. Yeah, you producing, let's say, Apple, iPhone 10, iPhone 11. Yeah, for example, yeah, just for example only. All parts for producing the phone are direct, but the box, yeah, the box of the iPhone itself is indirect. Yeah, usually if we bought the phone, they will give you a box, right? The box where they put the phone inside. Now that box is indirect material, but the phone is direct. Can you see the difference? Yeah, the box, the packaging, yeah, that packaging is also an indirect material. Yeah, indirect labor. What is indirect labor? Such as supervisor. Why the supervisor or factory supervisor is considered as indirect? Because as a supervisor, supervisor only stands behind the worker. Let's say if I'm supervisor, I have 10 workers that I have to supervise, then I will just stand behind them where I watch all of my 10 workers to work. If someday I'm sick and I'm not able to come to the factory, does the production will be affected? No. All my 10 workers are still there and work on the production. So supervisor factory salary is considered as indirect. Yeah, because it doesn't matter if I'm there or not there, the production is still happening. Yeah, the only problem that might happen if I'm not there or if I'm not coming for work is that they are work slowly than usual. Yeah, usually if someone is not watching them, they the worker is working not very efficient or effective. Yeah, so something like that. Yeah. Next, rent, heating and lighting, depreciation. But remember, guys, pay attention. Pay attention. Rent, heating, and lighting depreciation is only for factory. Because if you are in a manufacturing business, you will have two offices. The first one will be the factory, and the second one is the office, the head office. Yeah. So this rent, yeah, is representing only rent for factory. Okay. If there is any electricity, it also only for factory. Insurance also only for factory. Yeah. Because sometimes if you are in a one site of plantation, like let's say in Jababeka or in Pulau Gadung or somewhere, yeah, somewhere you have an area where your factory and your offices are side by side. Okay, and then somehow you have to pay rent. Means that you will pay rent for both of office and factory. You have to separate them. You have to separate how much the factory rent and how much the office rent, and then put the rent for factory in the factory overheads. Even though you paid the rent for one time, yeah, one for both, you have to separate them, divide them. Yeah, do you understand what I mean? Okay, good. Then after you have total factory overheads, yeah, this is your total factory overheads, then you will add them, add between prime cost and factory overheads. You add these two to have cost of goods manufactured. After you have cost of goods manufactured, the fifth step is to add work in progress. Yeah, work in progress beginning must be deducted with at the end. So you have the net of your work in progress, and then you add with above. You add with the cost of goods manufactured. Then you have cost of production. And this is how the manufacturing account will be calculated. So far, any question? No, yeah? Remember, manufacturing account, all are expenses. So you have to add all of them. Yeah, this is not calculating income minus expenses, yeah? So no one is deducted except that it is for purchases returned, inventory at the end. The others are added, yeah? This is the notes that you have to pay attention on. Raw material and work in progress will be used in the manufacturing account. Meanwhile, finished goods is in income statement. Once again, raw material work in progress will be in the manufacturing account. Meanwhile, finished goods is in income statement, yeah? Number 2, there is no income in the manufacturing account. All are expenses related to the factory. Okay. 3, all expenses related to office, expenses to office, will be entered in the income statement. Number 4, pay attention for any accrued or prepaid to the expenses. Adjust it first before entering or before make an entry in the manufacturing account or IS. It means if, let's say, in the factory rent, you have prepaid. So you have to adjust the prepaid first before you allocate them to manufacturing or to IS. Yeah? Clear? You must adjust first before divide them into manufacturing or IS. Yeah? Next, sometimes there is an expense that is paid for both factory and office. Okay, sometimes there is an expense that is paid for both factory and office. Calculate each amount for factory and for office before entering the manufacturing account and IS. There will be a portion or percentage information regarding that. Yeah, you have to separate them or calculate each amount for factory and office. Okay, for the notes, do you have any question?